Hi, this is Sive Morten with the daily update on EuroFX. I post my exclusive market overviews with the key political and economical events, charts, and important levels on the ForexPeaceArmy.com forums weekly. This short video is a response to rapidly changing situation on the currency markets and should help you to stay on top of the game and be profitable. I suggest you to visit ForexPeaceArmy.com forum and read my analysis for the week before watching this daily video.
Welcome back, everybody. Let's take a look again in the gold market. So today we mostly will talk about the fundamental background, because in recent few sessions gold market was closed due to the Easter holidays. Well, on Mondays also activity could be a bit less than usual, because in Europe it still will be the holiday, Easter Monday. So the chart that we have currently on the screen we already discussed before the non-farm payrolls release, and that's why mostly technical picture stands the same, but here we have to make a few comments. First of all, we do not have the reaction on the non-farm payrolls yet, and that's yet to happen, and probably it will happen on Monday. And despite the recent rally that we have right until the Wednesday, so I'm not really sure that we will get the upward continuation on Monday. I even ready to bet that on Monday we could get a downside gap open. And that's the reasons why I more believe in appearing of the butterfly here and another drop rather than appearing of the bullish reversal pattern. So people were asking me on YouTube, on our forum, why it can't be the double bottom, for example, or why it can't be the cup in the handle. So I wouldn't say that they can't be, but following the probability, and I already explained that the major targets 1670 and 1650 right below the market, it's just because of the probability, chances to see the drop lower before the major response on the support are higher than to see immediate reaction with the ignoring of these targets. Besides, if you will read the fundamental analysis that we have provided today on the gold, you will see that the bad times for the gold are still ahead. Currently, gold still could stay on surface and showing some reaction on the strong support areas on the daily chart. So that's why within the couple of months our trading plan stands the same. Despite we have the bearish view on the gold, we intend to keep an eye on the strong monthly weekly support area, which actually we have currently, because 1685 is a strong monthly support. And we could consider even taking the long position on the lower time frame, such as the daily chart. But all these positions will be short term and mostly treated as the retracement. The fundamental factors currently that we see suggest that the situation will start to change rapidly. Currently, gold still doesn't show the collapse, because markets currently shows the reactions not on inflation, but on a better economy environment, the signs of the economy recovery, acceleration pace of the economy, but not on the inflation yet. That explains why is together growing the interest rates and stock market. This is normal when you're dealing with the non-inflationary stage of the cycle, the first cycle after the reversal, when all markets shows reaction on just changing in the economy in the positive side. But then after the non-inflationary stage, you're starting inflationary growth, and their situation will be different. This inflationary growth should start to appear within the few months, supposedly, because by the investment analysis, U.S. economy should continue to generate approximately 700,000 jobs per month on average. That should be enough to create the 2 million additional jobs within the few months, and that could make the drastic impact on the Fed rhetoric and the changing of the inflationary expectations. That is the first negative perspective for the gold. Second negative perspective comes from the recent data since we have actually very good numbers on the payrolls, that makes unnecessary new stimulus from the government. Economy already stands at recovery, and it significantly diminishes necessity for a new stimulus. Finally, the wage inflation that has been released together with the non-farm payrolls number shows downside action. It means that a lot of new jobs have been created in a sphere with a low wage. So demand for a job is so strong that people are ready to work on absolutely on any place where that could be provided by the companies. So all this environment stands not friendly to the gold market, which suggests that within the perspective of the few months close to the summer, I will not be really surprised if Fed will start to change the rhetoric. And as soon as taper tantrum will start, what is taper tantrum? Taper tantrum is the decreasing of the buying the long-term bonds from the Fed. This is preliminary steps for a cycle of the rate hiking. So at this moment, gold will come to the collapse actually. So taking it all together, that explains why in the current environment with the recent non-farm payrolls data, I mostly watch for a butterfly here rather than immediate upward continuation. So, and for a position taken, currently I think that it would be better to wait when the major target will be reached. Of course, you could apply the scale in trying to buy here, and if market will drop here, add more. But for me, it is too expensive to buy gold at 1735, for instance, and place stop in $100 below the market. I would better miss the trade rather than lose the capital, and I prefer to wait with proper price level for taking the long position. So, personally, I will think about taking the long position on the daily chart only when the butterflies will be completed and major OP on the weekly chart around 1643 will be reached. That's just my position on the gold market. On the lower time frame, also not many things that we could add. Actually, all resistance levels have been erased here. This chart brings not a lot of information just because we do not know reaction on the non-farm payrolls release. The overall picture will become actual only when we will see it. Only after that we could plan something. That's why in the current environment I do not see something really valuable that could help us to make the decision on the trading. The only thing that we still could consider, that's only for those of you who trade on the hourly chart in lower time frames. That's recent thrust. So if somehow on Monday's opening we will get some Jod Napoli pattern, I do not know what it will be, minor brand bar on opening, maybe even double ripple sell, so that patterns could be considered because overall thrust is not really bad and minor patterns could be formed, but they have very limited relation to the overall situation on the market that we have. Besides, to be honest guys, I am ready to bet that on Monday hardly we will get any patterns based on this thrust because market could open significantly lower, so I'm really not count too much on these potential stops that we could get. So that's our view on gold market. As a conclusion, we prefer to wait for a 1650. Bullish context exists on the daily chart, upward reaction could start, but we prefer to wait for a 1650 area. So that's our view on the gold. In the long-term perspective, we have the bearish view on the market, and this bearishness could become stronger as closer we will come to the summer, and if we will see the same dynamic in the statistics that we have already.